As we know, self-storage is a very recession resilient asset class. If you look at the global financial crisis, 2007 to 2009, the S&P lost about 22% of its value, whereas self-storage maintained at about a 3 to 3.8% loss. Now, fast forward to the most recent financial crisis, which is the COVID pandemic. And according to TREP, a commercial mortgage-backed securities research firm, of the 1,700 CMBS loans that were made to self-storage investors, in the first 3 quarters of the pandemic, only 3 were delinquent. That is a 0.17% delinquency rate. During that same time, multifamily was defaulting at a rate of 1,800% higher, or 18 times the default rate of self-storage. The second piece is that the stock market is overvalued and over-leveraged. The last 2 times we saw stock market price earnings ratios this high with this level of investor leverage was right before the 2001 dot-com bust and then the 2008 financial crisis. And then, of course, interest rates are at an all-time low for now. The Fed has already signaled 3 rate hikes for the coming year. In addition to that, inflation is at all-time highs. The most recent report came out at about 7% inflation if you look at the CPI. Now, if you look at the 1980 function to calculate CPI before they started manipulating it, we're actually experiencing 10 to 15% inflation at the moment. So if you're sitting in cash, that's a losing proposition.